Okay, hello everyone. Hello to the few tech traders and to the wider investment community. And welcome to this weekly trading roadmap, where I'll be covering the main adventure and risk for the week, starting the 7th of September 2015. I'm recording this on a Monday. It's US Labor Day, so we're not really expecting much market action out of today. But we'll go through the rest of the days. Few central bank policy events that we could take a look at, particularly the Bank of England, the Bank of Canada, and the RBNZ, and then a few data points just nestled in between that we can hopefully seek to make a bit of profit out of. So let's take a first look at Tuesday, since Monday is US Labor Day, and we really don't have any data points or anything coming out today. What we're looking at on Tuesday particularly is the European GDP figure. Not a huge market mover, but it's really the only data point we've got on the day. Just taking a look at that to see if that affects the market at all. It's particularly because it's a preliminary number. We haven't really seen much volatility around this figure, but in any case, I've put it out there just in case we do see any movement. Then looking forward late on Tuesday, I think around 10 o'clock London time, we've got the US Koshler quarters, notoriously a dove but a non-voter. Taking a look at what his comments are, obviously a Koshler quarter being a notable dove, any sort of shifts in language or rhetoric more towards the hawkish side is going to be more market moving than anything. Obviously, dovish comments are expected. Looking over at Wednesday, where we get a little bit more to look at, we've got the UK industrial production and manufacturing production month-on-month figures. Pretty much the only data points to look at on Wednesday. And then really the focus is going to be around the Bank of Canada, which we're not really expecting much, but do be aware that we have Canada just recently entered a technical recession in the second quarter of 2015. That could be something that the Bank of Canada is looking at. Obviously, with the recent weakness in the oil prices, that has largely affected Bank of Canada, the Canadian economy, in which case there could be some scope for a dovish meeting. Obviously, we would expect them to be dovish, but there's nothing actually expected in terms of rate changes. So do keep an eye on that. If we do get any sort of rate cuts, there could be some nice little moves in the loonie. Taking a look at the New Zealand official cash rate, we've got the RBNZ, and taking a look at their event, we actually do have some market expectations for a cut of 25 basis points in their rates. So that's going to be interesting. We had last meeting in July where the RBNZ actually said a reduction in the OCR is warranted by the softening economic outlook and low inflation. At this point, some further easing seems likely. So obviously, given the recent volatility, given the weakness that we've seen in China, most market participants are actually looking for a 25 basis point cut in the rates. Now, since they left the door open for that further policy easing. Now the real question is, if we do get the cut, which is as expected, and we could get obviously a move out of that. I'm sure it's not fully priced in. I haven't checked the market pricing to see how much of it's actually priced in. We could get a bit of a move, but the real question is whether the RBNZ is going to indicate any further easing in the weeks and months to come, or at least the months to come. So do keep an eye on that to see whether we do get any further sort of easing bias from the RBNZ, which would bode pretty heavy for the New Zealand dollar. If we just take a quick look over at, first we'll take a look over at the New Zealand dollar, just to take a look at what the structure of the market is currently looking like, just purely from a technical standpoint. We've got a very, very bearish looking market. Obviously, we've been through this before. In my wrap-ups, for those of you that are listening outside on YouTube, we've seen this market come in a very, very structured sell, as you can see, within a trend channel. Had broken the trend channel at the beginning or late July into beginning of August. We couldn't hold the bid above this area, and we just kind of created this bit of a box region And here, as you can see, from the support at spot 64.96 up to spot 67.71. So around this area, we've seen a bit of a box region. We've broken out through that, obviously, with the recent weakness in China. We've been holding below that, and this was our really key support region. Going back on the weekly charts, you can see where we found that support region. You can see going all the way back to 2009, we've seen some support and some really key support and resistance areas. Even going back to 2006, it's played a pretty important role. So that was a pretty key little inflection point that we're looking at. We've just gone through that. So really the next real support region that we're looking at is the spot 59.09, which we've seen some sorts of support and resistance in here, but most notably, if we go back in 2006, there was a very key swing low here in 2006, Q2 2006, and also back in Q2 2004. So most notably, I think the important things to mention here, obviously, is that we've got a very key support region. We've come through that area. The real next area of support is there, and there's not really anything holding us back to trade straight through this area. So on any particularly dovish RBNZs with a cut and further easing bias, maybe we could see this currency pair trading down to this level pretty quickly. And the reason I'm saying this is because there isn't actually much structure really in the way of that, apart from maybe you could see here these lows in here at around 61.92s, but we're really trading around that region already. So once we get through that, really the next area is, like I said, these 59.09s. Notably, if we don't get the rate cut, and particularly we do get a bit of a rally in the Kiwi dollar, do bear in mind we've had 1, 2, 3, 4, 5, 6 weeks that built structure in here. So there's actually particularly good structure lows in here that could provide some good resistance. If we do get a bit of a move back up to test here, I would be inclined to be selling into this area on first touch, just because I'm sure that the easing bias is not going to be taken off the table unless it's something particularly hawkish, which I think is really not expected. So just bear that in mind. If we do get any rallies up into this area, they could be sold into, particularly at that level, as I mentioned before. Really quickly, just looking at the CAD, as I mentioned before, we don't really have anything expected, but looking at a monthly chart, you can see we had this very large looking cup and handle formation, which we just recently broke out of. Obviously, this chart is pretty much an inverse of what you would expect in the oil market, very largely correlated to oil. Obviously, we saw the drop in oil in 2008 that corresponded to this rally in this currency pair up to these regions. We saw the rally in oil, which corresponded to this move back down in the currency pair. Then the really big slump in oil took us all the way down to this area. Small rally in oil, and now we've come back off. Now, the interesting thing is that we're still sort of rallying in this currency pair, even though we've had a pretty if we just take a look at the dailies in here, you can see even though we've had a pretty big rally in oil, this currency pair just seems to still be wanting to rally to the upside. So just bear that in mind. We're just creeping past this key level at 132.63s. If we take a look at the monthlies, obviously, just looking way back in 1994, 96 is a really key little swing low area, and the real next resistance zone is at this 1.4, pretty much the figure, which pretty much boxed us in this area and held us as resistance in there. So and this is obviously a very large time frame. Obviously there's a lot of intricate levels in between. I don't expect it to offer some sort of resistance, but really once we get through here and we start using these 132.63s as support, I would imagine that the market has a pretty swift and easy target up to these 1.4. So just keep that in mind. This is how the CAD is currently structured. And we'll just move that over to the side and finish off with the rest of the week. We've got data points on Thursday. We've got the Chinese CPI figures. Obviously, China being largely in focus. Keep an eye on the CPI figures. If we get anything much lower than expected, that could be indication that we're getting further slowdown, and that could warrant some sort of move out of the PBOC again. With regards to a devaluation we saw on the 11th of August last month, that devaluation really did spark the volatility in the global financial markets. So anything coming out of China is extremely, extremely important. Keep your eyes glued to what's going on there. It's the second biggest economy in the world. You know, we were so hyped up about what was going on in Greece, when really Greece is a speck in the global economic ocean. It's just a drop of water. Really, China, if something real is beginning to emerge there, that's going to really provide some bigger turmoil in the market. So do keep an eye on these figures. They're really quite important. We've got the Australian employment numbers out on Thursday, also very important numbers for the Aussie dollar, with US initial jobless claims as per every Thursday. And the DOE crude oil inventories are actually moved to Thursday because of the Labor Day on Monday. This is usually out on a Wednesday. Come into Thursday, we've got the Bank of England's rate decision and minutes. As per last meeting, we've seen that the minutes actually come out the same day. We had an 8-1 vote last month. We're not expecting any change on rates, but I'd say given the recent volatility, any move in the vote structure from an 8-1 to a 7-2 would be particularly hawkish in my opinion, and I think that would really invoke probably some serious flattening across the curve, the fixed income curve. So do keep an eye on that. Not particularly expecting much out of that, but it is quite important to note, as recently we've been seeing a little bit more hawkish rhetoric out of the BOE. But given the recent volatility, I would expect they kind of maybe hold back a little bit in that respect. Looking over at Friday, we've got the US PPIs, the core PPI figures, relatively important figure. Obviously, purchasing power is going to be coming into a bit of focus as inflation is really on high alert for the Fed. If we do get higher numbers in PPI, particularly CPI, but PPI could also play an important role. That is going to play a large role in whether they raise rates either in September or December. Obviously, the market now pricing in, I think, about a 20% chance of a rate hike in September. So do keep an eye on these figures, because anything particularly high in the inflation spectrum is going to maybe force the Fed's hand earlier than the market's expecting currently. Remember, good figures are going to be a lot more market moving than bad figures, because the market's already priced in pretty dovish, I would say. We also have the U.S. University of Michigan Consumer Confidence, the preliminary number. Do keep an eye on the consumer confidence. Obviously, the U.S. is a largely consumer-based economy. That's really quite important. If we take a look over at the risk and money management plan, I've put in really 10% is actually probably an exaggeration, but I've just put that in there. Risk allocation for Mondays, no event-driven risks, U.S. labor market holiday, very light trading, very low volume. Just keep everything at bay, I would say. Tuesday, I'm looking more at 2 event-driven risks. Not much relevance, but I'm giving myself 15% risk allocation. I've seen between Monday and Tuesday where we're getting most of the volatility nowadays. Thursday and Friday is starting to back off a little bit, but we're seeing a little bit more event-driven risks towards the middle and end of the week. So I'm giving myself a little bit more risk allocation on Wednesday, as we've seen those central bank events, the RBNZ and the Bank of Canada. Thursday, as we've seen, we did have the Bank of England, 25% risk allocation, and Friday 20% risk allocation, as we've got the PPIs and University of Michigan Consumer Confidence. We said just take a quick look to close this up at some of the technicals and the main markets that I trade. What's going to be particularly difficult for me to go through actually in the bunds is the weekly profiles we've seen this week. On Tuesday, we're actually rolling from the September futures to the DEC 15 futures, the December 15 futures. So the volume, I've actually got the weekly profile for just the DEC contract, which currently rolled in volume already. The official rolls on Tuesday, but we're already trading the debt contract because there's more volume in that contract. But as you can see, going back, the volume's very fractured and limited in scope, so you're not really going to get a lot of information out of this. But the really main areas to focus on, we've got the closing gap, which we filled already on Monday today at 155.12s. This VPOC here at 154.68 seems to be holding the market up just a little bit in there. We've got the gap, which was left on Friday at between 154.26 to 22. So I'm assuming this area could be a decent area of support. I'm not looking at the volume value area just because, like I said, the volume is very fractured. I'm actually leaning a little bit more on the TPO value area, which comes in around 154, the figure. And that's also the 50% of last week. So I'm giving a little bit of credence on this area. It could be an interesting area to take part in, an interesting area to get involved. And then below that, really, if you are to be remaining bullish, I'd say the most important thing is for this market to hold above 153.53's low of this week. And if we toggle this, it's also the high of this day. Really the main breakout point which took us higher. So I'm looking at those 153.53s to see whether the market is going to maintain its pretty much bullish bias. Down to this area here, if we do get back inside here, there could be an argument once we get back into this value area, we might want to come back and test these 152.82s. I don't think that would bode well for the bulls though, so just bear that in mind. We do relatively have a big volume cave, even though we were rolling pretty much all of last week. A bit more volume. You can see there's a bit of a cave here, so I'm assuming once we get back below here and start using this area as resistance, particularly this VPOC at 154.68, there could be scope for this market to come in and fill this in. So just bear that in mind. Keep that in the back of your heads as well. Right, so lastly, looking over at the stocks, I think also a very interesting profile on the weekly. Obviously not rolling yet, so a bit more information on this. But what I would note, very first thing I think is the inside week. The metrics on that, obviously the 32.97s is the inside week high, 31.43 is inside week low. Looking for initial volume indications of a move through these areas at 31.64, which is the value area low of last week, volume value area low of last week. I think the first port of call to take a look at, we've already held support at these 31.84s, which is last week's VPOC. We haven't quite touched it yet, but I would imagine this is going to be a very, very, very important first port of call. If we can hold above this, I would assume the next area we're going to attack is this value area high here. Do remember, do keep in mind, below this 32.45, just a couple ticks below that, we've got the value area low of the previous week before that. So this area's actually got a lot more importance. If we do start bidding and holding above here, I'd say it's likely that we're going to try and attack this inside a week high. We've got a double top high there, so it's a really bad looking high for me. I think that should go. And within the context of the weekly, we've got a very large tail to the downside. The structure, and a bit of a tail to the downside here. It would make technical sense if we broke it. Whether we can sustain a break above that, that's a different question altogether. But currently it's looking as if this is maintaining sort of a short-term to medium-term bullish bias to the upside. I don't like to hold these biases, but it's important to understand how it's structured and what the context is. If we break below these 31.84s, that's going to change a little bit of the picture. Because if we can hold an offer below these 31.64s, that's going to give us really good scope to break this inside week. And that could really open us up to the downside, really down to this weekly value area low at 30.64s. But really, I mean, the ultimate area we're looking at is down to this, sorry, I'll just try and open this up. 29.51s, which is that weekly low there, but that's the market is going to have to do quite a bit of work to get down there. So I'd assume there'd have to be some considerable volatility, some considerable weakness. I'd say first in the Chinese markets to actually make that argument to the downside. Now, if we do hold above here to the upside, the areas that I'm looking at, I'm quite interested in the first port of calls, these 33.34s in the weekly profile. weekly value area low. But what I'm really liking actually is this 33.55's high volume node on this week here. If you toggle that week, it's also a resistance area on the day. It was the high of this day here on that Friday, because that was the last day of that week. This is a Friday. Going back, it was also a VPOC, one tick above here on the weeklies. So I'm liking this area. It looks like there's a bit of an area that the market might like to auction off of. I think that's a really important area, 33.55. I'm keeping that area in mind. Obviously, we've got the 50% in here, just nestled in at 33.75s. Next port of call really for me is around this daily low, around 34. I'd say it comes in around 34.23, 24, but I'm looking at this low volume node just nestled in there at around 34.28. So we've got, this is a bit of a buying tail in here. We left, and then this is the high of that day at 34.28. Low volume node just ahead of this bit of structure volume in here. So I'm looking at that area particularly to see if we can get any sort of resistance if and when we get up there. Other than that, moving up into that week, we've got the VPOC, which comes in at 3,500, basically 3,500 the figure, and then the value area highs of that week at 35.19. So I'm not really going to go any higher than that because that is also that'd be a particularly amazing week for the stocks if we could make it all the way up to that level. That's about 4.5 points higher. 3.5 points higher. So there's going to be quite a bit of work to get up there. But nonetheless, I think I've gone through quite a bit for the stocks. It looks like it could be a pretty interesting week if we get a bit of volatility. Right, so that's pretty much what I wanted to go through for the weekly roadmap. I'll be with you again tomorrow for the... I'll be doing a price ladder video analysis on Tuesday at 12 o'clock p.m. Do tune in on our streaming. Text Live, for those of you who don't have a login on YouTube, if you're listening in, you can create a login for free and have a free trial for 7 days. Just check it out if you like it. Stick around. We've got some great analysis from some of our traders daily, 3 or 4 times a day even. Hopefully you guys have a great trading week. All the best. Hopefully be a profitable one, and do make sure to stick to your plans. Know your risk, know where your reward is, and trade your edge. Steer away from what other people are trading. If other people are making money in something and you don't understand it, just don't trade it. Trade what you understand. Trade what makes you money. Anyway, good luck and take it easy. Bye-bye.